All right, I think we're good to go. So, hello everyone, and welcome to another edition of This Week in Crypto. If this is your first time here, basically this is a weekly panel call where the Sentiment team and community members we get around and we talk about the recent crypto market events. But we talk about it from a fairly different perspective, with a lot of fundamental data and just discussing sort of interesting market insights and conclusions that we've discovered using our own in-house built metrics and indicators. So if you've never used Sentiment before, we have developed dozens of tools, strategies, custom indicators using a variety of different sources, including on-chain data, social media information, and development activity information, all with the goal to help you guys better understand what's going on in the crypto market and the behavior of its main or major market agents. So I suggest checking out sentiment.net after or during the call if you like what you hear. And joining our Discord also because we talk about this stuff pretty much every day in our trading channels. So the link to both sentiment.net as well as our Discord channel will be in the description of this video. So also, I just want to give a quick shout out to Bagsy, who is joining us for the call today. Bagsy is a cryptocurrency trader and one of the OGs of crypto Twitter. Hey, Bagsy, and good to have you here today, man.
Thanks for the warm welcome. Thanks so much for having me. Looking forward to this call.
Sounds good. Okay, I think Brian is already sharing his screen. So, Brian, if you want to start us off with the analysis, I'm going to mute myself and hand it over to you.
You bet, you guys. Thanks, Dino, and welcome, Bagsy. Welcome, everyone, to another edition of This Week in Crypto. We're going to start it off a little bit differently, as most of you who've tuned in recently have seen. We generally talk a little bit about MVT, and I'll touch on that very briefly. But the big meat of today's conversation is going to be on sentiment and exactly how traders and investors are viewing crypto right now. We're about 2 weeks removed from Black Thursday right now. Lots of polarization in the markets. A lot of people think we're heading right back down to where we bottomed a couple weeks ago. Many people believe that we're heading right back up to 8 to 10K. It's a big mix, but regardless of what people think, the fact of the matter is coronavirus is still very prominent. The US, which makes up a majority of our traders on sentiment and in the markets, are currently seeing, we're seeing that we just exceeded China for the most cases. It's definitely having an impact on the traditional markets. We have seen a bit of a tail off from the correlation between crypto and the traditional markets, which is a good thing for crypto, as when we have high correlations, it tends to reflect negatively on the crypto price. But what we're seeing here is our Graphs social platform, which all our Sandbase Pro members have access to, and indicates exactly what the positive versus negative sentiment scores are in terms of any sort of keywords that we track on Discord, Twitter, Reddit, Telegram, etc. Right now, we're highlighting Discord, and what I'm showing are the last 3 months of all of the negative and positive keywords that have been traced by our platform and how they have fluctuated. And as you would expect, when things are going up, you'll tend to see a slight positive bias here. When things start to tail off, like right around here, that's when negative started to kick into gear. And as we can see on Discord, which I'm highlighting because it's our second biggest platform next to Twitter in terms of total tracks, we had a large negative jump. The virus began to become pretty much mainstream in terms of consciousness. And when that happened, we had a big tail off. And then obviously when things dropped off, we had a much larger spike in negative sentiment, and positive slowly started to drop, especially once we were officially bottomed out here. What we're basically seeing right now is a mini rise, which has us currently at about 6,600 at this time. And it's basically had the negative and positive sentiments collide. And we're basically flat between negative and positive scores, which is very interesting, meaning we're at a pure polarized price right now. It can go either way based on sentiment. and obviously sentiment is a big carry on our markets. And we're going to have to watch over the next week or so how this plays out, because if negative starts to take over again and Corona becomes a big fear, which I feel it very well could be, with the cases at an all-time high, especially here in the US, that would be bad news for the price, and we could start to sink back down to 6 or a little bit below. There are plenty of support levels which can prevent this from happening, or allow bounces to happen even with a negative sentiment score. And there's plenty of other factors and metrics that we'll talk about on this call. But for the most part, you can really track how these sentiments are doing and how prices may react to what traders and investors are thinking at any given time. And then as I go down here, you can see what the net scores are of positive versus negative over time. So this is basically an addition and basically subtraction of positive versus negative at any given time. If it's negative, that means more negative. If it's positive, that means more positive. Just as we showed above, we're pretty much right flat, if not just barely below the line right now. So I highly encourage you guys to check this out. Our graphs.santiment.net/social platform is one of the easiest quick check resource tools we can offer to you guys in terms of just seeing what sentiment is looking like at any given time.
Yeah.
Any thoughts on this? Anyone else?
Yeah, just a quick maybe explanation for those that are unfamiliar with where we gather the data and how we calculate it. So very briefly, we have our own social data set, our own kind of custom manually curated list of social channels that we track. Currently, we track over 1,000 different crypto-specific social media channels. So that includes Telegram chats, Discord channels, Twitter accounts, crypto subreddits, pretty much everywhere where the main topic of discussion is cryptocurrency related. So we conflate all of these data into these charts, and when it comes to calculating the sentiment of the messages that we track, we're not trying to overfit the model. So actually the sentiment that you see here is only taken from about 70% of the messages that we collect. So the messages that are sort of ambivalent, or our system or our algorithm is not really sure about whether, to label it as positive or negative, we ignore it in order to not, skew the data all too much. So currently we're looking at Discord. I would also be interested, just because Bagsy is on the call, to see what is happening over on Twitter, because this data set has been trained on Twitter data specifically. So our sentiment metrics have kind of been trained, and the algorithm for detecting positive versus negative messages have been trained on Twitter data first and foremost. So it would be interesting to see what's going on over there, and if Bagsy kind of feels that reflects the reality of his everyday sort of interactions on Twitter.
The one thing I'm just going to say about the Discord one, you could tell there were some divergences in price and sentiment before the drop and rise. So you could actually use sentiment as a tool. It's very interesting. But on Twitter, I mean, I always feel like it's either people are screaming bullish or screaming bearish. I've never really, there is an overwhelming, emotion to the space, but personally I try not to pay too much attention to it. But I'm curious what Santiment pulled up for Twitter. It looks like a drop in negative and positive.
Yep. So that's just the positive versus negative, right, Brian? And then the next chart would be the basically calculating the difference between the two.
The net, right?
There we go.
And yeah, so we're still barely on the positive side, but it looks like, especially going back to this graph, the positives are still overwhelming the negative. And I think I sort of have an explanation for that. Twitter's always been a little more on the positive side, as I've checked historically. Part of the nature of Twitter is with followers and retweets and likes being at such a premium, there needs to be a bit more of a bias toward the positive side in order to actually be heard.
And I believe that.
What's that?
Because there's something to sell.
Yep.
Exactly. And people actually have an objective in terms of gaining followers, gaining clout, etc., what have you. Many people's objectives are genuine, some maybe not so much. Either way, in order to get views, people tend to skew positive because they know that telling people the truth when other people are positive and they're the only ones negative, they know that they tend to get buried on that platform, whereas Discord's a bit more of um, a neutral place to express opinions. So interesting here, and I would not be surprised to see this gap close a little bit over the coming weeks as we start to either go up too much or start to descend. It tends to be. Yeah, go ahead, Dino.
Yeah, if you go to the next chart and then kind of compare it to what's been going on Telegram and Discord, you'll see there's a massive difference in the way that the different sort of crypto-related crowds have reacted to the latest drop. So if you go to the last chart, which kind of takes that one, which takes the difference between positive and negative messages, but also adjusts it for the amount of social volume at any given time. You can see that the actual sort of sentiment towards Bitcoin as it was crashing on Twitter was leaning slightly positive. And then if you go over to Telegram during that same period, it's a very different picture as far as I remember. With probably the biggest drop in the sentiment over the last year or so. Yeah, there we go. Like if we were to zoom out to the last year of data, this would be, I think, one of the biggest drop-offs just in terms of Twitter related sentiment. So this is -2 standard deviations, a bit techie, but in general this means there was a lot more negative sentiment towards Bitcoin compared to its standard levels, essentially. Yeah, there you go. That's what's been going on different on Telegram specifically.
Yeah, actually, this is my favorite metric, to be honest, around these social things, because it takes into account how much positive and negative chatter you have, but also takes into account the amount of messages being sent out. So it's one thing if you have maybe a lot of positive or a lot of negative. It's another thing how much people are talking. And this is taking into account also the volume of the talks. So it's going to be more extreme if you have more people talking. And the more this metric approaches to these dashed lines, the more it is extraordinary, basically. So this actually looks pretty awesome that we reached such extreme levels of negativity around this time. Yeah.
Imagine how many people probably sold off here at the bottom as well. If we have this kind of volume spike toward the negative side, there are a lot of people who are fudding down here when we're reaching, prices below 5,000. What did it get to? Like 36, 3,700 on Black Thursday? Like, I can't imagine what kind of people might have actually dropped off their bags down here and then watched it go right back up, and they're just going, I don't know what to do.
Yeah.
Dino, are you showing sharing the graph?
No, it's Brian.
I'm currently sharing.
Yeah, can you increase the scale, like select an area from when we dropped down last time from this top 10? I mean, the last 1 or 2 months.
Shorter time frame, you mean?
No, you can do with mouse. Just select directly on the chart.
Got it.
We select this. No. I mean, how to explain?
What do you mean, Max?
The previous resolution, but only the last month.
Oh, you mean kind of zoom it out, but only to the.
Yes.
I think it naturally zooms in because you don't have the spikes aren't as big, right? So it's going to sort of only compress the data sets that you need, right? Val, am I wrong?
I'm not sure that I get what we want to see here. Like, is it like the last month we want to look at?
I'm trying to do it on my computer.
Okay. But in the meantime, I think just one addendum to what Brian just mentioned, that a lot of people were kind of probably selling it, that market crash point. One of the recent articles that I wrote, you can find it on insights.santiment.net maybe 5 or so days ago, was I was looking at the what's been going on chain with stablecoins specifically, because there's been a lot of talk about how the market cap of stablecoins, the biggest stablecoins specifically, including USDT and USDC, has kind of exploded since the market crash, which would indicate that a lot of people are kind of flooding into stablecoins, right? So there seems to be some proof of that in on-chain data as well, both in terms of when we look at the USDT, ERC20 Tether specifically, and USDC on-chain data. When we look at the behavior of their whales over the last maybe 2 weeks, we can see that they have not exponentially, but very significantly. There you go. That's right there. We're looking at the total balance of the top 100 addresses holding Tether, ERC20 Tether, over the last 3 months. But here specifically, we're only looking at the non-exchange wallets. So we can see that since the market collapsed on March 13th, they have added about 250 million USDT to their collective bag. So if you assume that at least part of it came just from selling off their stock on exchanges, moving into stable coins until the market kind of stabilizes itself again, it's definitely a sign of sort of a growing uncertainty among whales. And also, I think further down in the article, there's a few charts showing the retail sector sort of doing the same thing as well. So if you go a bit down, let's see if we can find it. That's the, yeah, so I think that one, right. So this specific chart shows the amount of or the total balance of USDC found in addresses that are holding between 1,000 and 10,000 USDC. So these are sort of, mid-range retail holders. And you can see that pretty much the same picture starts to develop over the last 2 weeks, where just around the crash, there's been, I think, more than 2.5 million USDC added to this specific category of holders. Basically, both the whales and retailers across the spectrum are starting to accumulate more and more stable coins. Essentially, I think a lot of them are exiting the market. But there's another argument to be made here, which I think maybe doesn't have as much weight, which is that some people are simply converting their fiat into digital dollars and waiting for the market correction, which would be, essentially a bullish sign. But I think that's probably a minor part of the, of what we're seeing on the charts. And I've checked them back today. Pretty much nothing changed in terms of the behavior of whales and retail holders of Tether and USDC. They're still accumulating. There hasn't been any sort of drop off in their bags. There hasn't been a massive spike in the amount of stable coins entering exchanges, back into circulation. So for now, I think a lot of people are still kind of waiting on the sidelines and trying to figure out what's going to happen next.
Yeah,
it's really like it seems like also the market cap of USDC has been increasing quite a lot in the last 2 weeks.
Yeah.
Like beginning from March 10, you can see that increased from 450 million to almost 700 million. So it kind of really corresponds to this spike here. So it could be a lot of money being converted from fiat to crypto.
Could be, yes.
At least for the USDC, it's kind of visible there. I mean, for Tether, not so much, but I think it's because Tether operates a bit differently. Like they mint a lot of Tether in their treasury, and then they put it into circulation in Bitfinex. While with the USDC, I guess they're minting these dollars, these crypto dollars, as soon as people are converting fiat to USDC.
Yeah, one other sort of peculiarity with USDC is that you can actually kind of use it as a CeFi rather than DeFi, right? So I think on Coinbase you can stake USDC and get interest rate on it. So there's I think that's part of the reason why we've seen a bit of an inflow of USDC to exchanges around the time of the market crash, at least compared to what's been going on with other stable coins. The reason for that possibly being that you can do something with USDC on exchanges rather than just using it for trading, right? But yeah, it's a combination of factors. But overall, this is what the charts are showing, that more and more people are sort of accumulating stable coins for the time being, which
Yeah,
Cash is a king.
Seems
And
like sentiment shows that everyone panicked and panic sold.
right.
Yep,
And,
pretty much.
and the key in what Dino just said is for the time being too, because if you really think about it, if people weren't interested in being in crypto at all anymore, we wouldn't just see a surge in stable coins. We might see a temporary surge followed by a drop off as people liquidate their Bitcoin, Ethereum, etc., and then cash out to USD. But right now, we're just seeing it being held in stable coins universally, USDC, US Tether, etc., because people intend on going back in eventually. They're just uncertain right now with the conditions our world is seeing.
Yeah,
So
I
as
would
a
agree
result,
with that in general. I think I bring that point up in the article. This doesn't like short term to me. It kind of looks bearish, but at the same time, it's very important to realize that I think most of the people understand that this wasn't sort of any sort of a crypto related apocalypse. It was just something that affected the entire world market, and therefore
right.
they understand that it's not necessarily spelling out the end of crypto. It's basically just meaning maybe we should chill out for a while, wait on the sidelines for a few weeks, and then go back into the market. At least this is how I'm reading the charts at the moment, as far as stablecoins are concerned.
That's a very
Exactly.
good point, Dino. I would say it's a postponed buying pressure. So they're looking, we're waiting now for the first heroes who will be ready to take risk and push it up. And then you know how it works in crypto. After some level, okay, everyone is freaking out and there is a FOMO.
Yeah.
And there is enough crypto cash waiting for it. So we just need to go a little bit higher.
Yeah, and if you guys wanna follow along these charts, you can find it in Sand Data. Basically, you can find the holder behavior of all of the different stable coins. So essentially, for example, every day now I check out the top holders for USDT and what they've been doing with their collective bags, because once I see this major, because they've added literally like 25% on top of their existing bags. They had around 750 million in USDT held in their private wallets before the crash, and then they added another 250, now around $300 million or USDT.
Wow.
So yeah, it's a big addition. So the moment that I kind of start seeing that amount of coins become starts moving again, and the moment I see both the drop off in the holdings of top tether whales as well as the spike in tether in going into exchanges, I would definitely consider that sort of the start of something big. So if you guys want to kind of follow that on a daily basis, definitely check out sentiment.net/sanddata for real-time updates on what we're talking about.
Yeah, and I actually had the top holders metric highlighted as well, because I was going to briefly show Ethereum, which is showing a little bit of accumulation as of late. I'll zoom in here to just the last month so you can see.
Mm-hmm. Yeah, when you do that, sometimes it breaks, so just refresh the page.
Layer.
Yeah.
Got it.
And show the top 100. Maybe it's more of a
better
picture.
I can do that. Doesn't seem to want to behave right now. Yep. Let me refresh all of Sand Data.
Now you have Bill Gates moment, yeah?
You need to select a larger time frame, not like 30 days, but
keep it at like I'll just put it at 90, see if that does the trick.
Yeah, or maybe Amazon is having problems again.
It literally worked a second ago.
The good news is I have it here too.
Okay,
so
good.
I'll just do it this way.
Okay.
So try to tune out all these lines below. These are all other various projects. The very top one up here is Ethereum, and Ethereum's percentage of cumulative change over the last 30 days within the top 100 holders. So over the last 30 days since February 24th or so, an increase of almost 1.5%, probably about 1.3% or so. The numbers cut off right there. But that's significant when you talk about the second leading market cap project. It's indicating that after this price drop, when a lot of people jumped off, there was a huge spike in the percentage of holdings of these top 100 holders. So the people who have the most capital in Ethereum are confidently purchasing more, while the smaller ones are selling. And this is a good sign that we are at least in the midterm, probably on our way to recovery, ignoring the short-term volatility that we'll probably continue to experience with coronavirus being such a major impact on the world. But this is kind of what you want to look for. A lot of these projects you can see are actually on the negative side, and that means that the small cap tokens may be taking a short-term hit, even though yesterday, as many of you know, was a good day for the smaller cap token. Today, we've had sort of a retracement of that, and we're seeing that the large caps like Ethereum, this one here, Golem is another small, but Ethereum, Kyber, the ones that were doing well right before the big hit, their holders are generally staying strong and purchasing more as the smaller traders are shedding their bags.
Maybe that has to do also with Ethereum 2.0 or Casper, whatever protocol they're coming up with for the last 3 years. Maybe bigger holders have some news. But overall, that's interesting.
Yeah.
I'm not surprised that Ethereum dumped less than the rest.
Right. It's very possible that there's some fundamental news that some of the big insiders know of that the smaller traders don't. I think that's a really good point. One last thing I want to show is our emerging trends over here. So what this platform does is it measures the total mentions in terms of social volume for any keyword or keywords that you enter into our prompt here. Right now, I've entered 3 positive words that I've analyzed before: bullish, buy, or buying. Put them all in one pot here, and we're generating the total amount of views here in green. And then the social dominance, which is the percentage of total mentions that we're covering that that encompass these 3 words. And we're seeing how things fluctuated over time. And interestingly, you can see there was a huge surge in mentions of buy, buying, or bullish right when there was a drop off here. We actually got up to about 3.55% social dominance right during that Black Thursday stretch. Now, for comparison, I've got bearish, sell, or selling, and we saw a similar spike, meaning there was an overall surge in discourse in total, both on the buy and the sell side, which we could sort of see looking at that earlier social graph chart that we checked out at the beginning. The difference is this social dominance was about a percentage lower. So there were a lot more people screaming buy the dip, and then both of them started to tail off as prices stayed low for about 3-4 days here. And then when the bounce happened and we started to see, a rise toward the mid to high 6,000s over the past week, the social dominance dipped below 1% here at one point on the sell side. And then interestingly, it's sort of maintained itself on the buy side. So if you base it on just the 3 of the most positive versus 3 of the most negative keywords, we're still seeing a positive bias. And this is one thing that can be tricky when you compare it to something like our social graphs, because you might see a bit of conflicting data. That's why you have to use your own creativity a little bit to figure out which keywords might be trending and be the most positive versus most negative. And if you want ideas, you can actually go to our main emerging trends page here and see our top 10 trending words at any given time, which currently it doesn't look like there's anything directly related to buying or selling or positivity or negativity. I would say something
unemployment.
Like unemployment for sure. Exactly.
Yeah, there you go.
USDT.
By the way, select unemployment. I want to see when did it emerge? Because this is a beautiful picture. I think beta 3, because I think with aggregation we have some problems.
Right.
So it shows actually unemployment, and on the right you see the recent context for unemployment. Yeah, like the last 24 hours, I guess.
Right.
Median claims. Okay. So it's a currently very popular topic in crypto.
I guess
like one of the top. Okay, so we should try to understand people when they discuss it. Do they feel? I mean, we take crowd, so we try to find if there is consensus. Do they feel very positive? Is it good for crypto? Is it bad for crypto? Or they are not clear on the outcome? The reason we try to understand it, once you spot there is a consensus of the crowd, you can go against it and you will be in profit. But this period of time, that doesn't happen so often. Let's say once per week, you can get, okay, crowd has consensus on something and you can go against it. And I would say this is one of the best strategies. Now it's, we clearly see it's now a very strong topic. So is there is, I did not read much about it because I think it's for US, they discuss a lot of unemployment.
Correct.
Yeah. Mm-hmm. So now I think you're better in assessing what people believe is the outcome for crypto. Good, bad, or they're not clear about it.
Mm-hmm. The narrative that I've seen, just for context, this spike here is because today we're getting a stimulus report from the federal government here in the US, and they're going to be announcing for unemployed people or people making below a certain income that they'll be receiving I guess a stipend check is what it's called. I could have the terminology wrong there, but they're basically getting money mailed to them while they are out of work because so many people have been unemployed. And today the claims for unemployment are coming in as people have to declare whether they are eligible for this check from the Fed. So they're working out the actual concrete details today, and I guess toward the end of the day we should have a result on that. But for the crypto world, we in general, it seems to be a positive narrative because we're realizing that the government is providing this because of the fact that people are out of work, obviously, and also because the markets continue to lose money overall in terms of revenue. Even though it's been a little flat over the last week, the revenue of many of these bigger companies are losing because people are out of work and people believe the markets are going to drop, and therefore crypto will be more of a popular alternative. Bagsy or anyone else that may have a little background on the US, please feel free to chime in and give your own opinion on this.
Well, I can only tune in from Canada. They're doing the same thing. They're going to be giving $2,000 a month for 4 months to people who can't work. But overall, I think it's pretty bad. If you don't know where your next meal is coming from, let's say you don't qualify for this and you can't go to work, no one's going to be buying Bitcoin. And then the next question is, how important is retail money really? And I'm sure you guys have a better answer than I would. But all in all, I think there's a lot of fear. And if people, if this COVID virus continues, if social distancing doesn't work, if people don't follow it, I personally don't see a lot of money flowing into crypto. Of course, you have big companies like Bakkt, and they're getting 300 million in funding. So crypto isn't going anywhere. But in terms of retail sentiment, I feel that it's going to be a long time before people start hopping back into it. But I could be mistaken.
That's a fair point. I'm curious, do you think that there might be a small percentage of the group of people who aren't able to be in the stock market that may come over to crypto from the markets, and it's not just people?
Yes. The liquid ones who were smart going into this, absolutely, this is an opportunity. Now, how quickly they will do that is another question, because we saw the USDT top holders, USDC, a lot of money flowed into it. So they could take months to really start deploying capital. They might want to wait for a double bottom. They might want to wait for lows to break. They might wait for price to reclaim a structural level that makes sense. So I think it's going to take a long time before we really start to see a big shift in from negative to positive. But, I don't know everything.
Yeah. Really good points, though. Really good points.
I think an interesting question is, if we assume that the stock market continues to drop, which is actually it jumped quite a bit in the last few days.
Mm-hmm.
But today it's tanking again because of all of these concerns around unemployment and stuff. is this going to also lead to a dump in the crypto space? And my feeling is that people already like deleveraged their positions, so they liquidated their risky positions with crypto and stuff. So how it's possible this is going to go down from here? I mean, are you gonna find enough sell pressure in order to drop it even more? Because it's already dropped like 50%.
Mm-hmm. It's like an altcoin, right? It drops 90%. It can't drop another 90, right?
Yeah.
But no, that's a really good point you bring up. I don't know. I guess it depends what Arthur wants to do, right?
But I think people relying on, these people are getting money, they're going to invest in crypto. That's not realistic. Like, come on, like that's not how it works. But I guess there should be enough money on the market that if they decide that this is the right time to buy crypto, like investors, they can move the price quite a bit. And they probably exited crypto when the price dropped. So there shouldn't be a problem with liquidity. I guess it's a problem of are these people going to buy or not?
Yeah, I think a lot of money definitely did capitulate, like you said, in the 4Ks. Well, like what I did, I bought at 4.1, and I got really lucky on that. I'm not going to claim, master trader, but I bought in at 4.1, and I've been tethered ever since we moved up. So I'm mostly tethered because I don't know what's going to happen, but I do want to ensure that I have USDT or USD or whatever form, because I don't want to guess.
Yep. Yeah,
but that's just me.
Yeah, while we're on the social trends tool, can you just quickly show the update to the coronavirus mentions? Because last week we talked about how there seems to be an inverse correlation between the price of Bitcoin and the mentions of coronavirus on crypto social media. So I'm interested if that still holds true and how much it holds true. Okay. So it seems like over the last day or two, it's finally broken this sort of inverse correlation a bit. But yeah, overall, like you can see it over the last 2 weeks, pretty much every peak of coronavirus mentions was followed by a bottoming of Bitcoin, and then vice versa, right? So
yeah,
a very sort of interesting pattern developing on the charts. This is for crypto specific channels. So it seems like, as the worrisome and sort of negative sentiment related to the current coronavirus pandemic starts to flatten out a bit on crypto social media, the recovery of Bitcoin, seems more and more likely to happen. But yeah, over the last 2 days, I guess we're seeing this correlation slightly break off. So who knows? Just keep track of it.
yeah. And this was essentially the discovery point back here in late January when we started hearing about it in China. Then we had sort of a calming, and then this was the major discovery for the West and Europe, which started to see much more of a rapid deceleration in Bitcoin's price as well. And then, of course, when we had the big Black Thursday drop, that's when everyone looked at Corona as the reasoning for it. And that's when all this discussion went here. And everyone said, well, if price is going to drop this much, we have to figure out why. And all the discussion related to Corona, which was likely correct. And since that time, things have rebounded. And the awareness for Corona is still everywhere. Everyone knows about it, but it's not nearly as discussed at the point that it first was when the price dropped off a cliff. And that's kind of the pattern we see a lot in terms of a random altcoin going up. It's very interesting to see just how often these types of keywords are discussed in the mainstream.
Yeah.
You guys want to laugh?
Please.
Sure.
On March 9th, so right where that peak is, that was a full moon. So everyone's fucking emotional too. I don't know if you guys believe in full moons and the ebbs and flows of water, but I find that there's a lot of irrationality around those days. So it's very interesting that there was a moon at that point.
Have you ever done sort of a lunar analysis of the crypto market?
A while ago, actually.
Yeah.
And there is some relevance. Now, I don't know about the red moon, blue moon, all the different moons, and know if it's bullish or bearish, but I do know that volatility tends to spike around those times. So it's very interesting.
Yeah,
I'm sure you guys have done it.
We should do it though. We have Jan on the call, right? Jan, let's get on this. The high priority. Figure out how the moon is impacting Bitcoin.
That'd be cool. You'll get some of the Gone people in there.
Yeah. While we're on this one final thing, I see the XRP topping our list of emerging trends at the moment. Can you go back, Brian, and enter the social trends sort of dashboard for XRP? Because I think it's because it's pumping at the moment.
Really?
Yeah.
Shit.
I'm not seeing much. I see a slight jump in
No. Can
Ripple,
you plot it against the XRP price?
Yep. So this is just the last week here.
Yes, just slightly.
We do see.
Yeah.
This was a lot of altcoins yesterday, and it's interesting to see that Ripple is being isolated here because there were some alts that went up a lot more than Ripple. I would guess it's because Ripple's the #3 market cap, so there's just a lot more attention drawn to it. But I don't know if any fundamental news related, if anyone else
No, there
does.
wasn't. I checked. But if you go over the, select the 6-month view for the amount of like social mentions of Ripple against the price of it. Yeah, there you go. So you can see kind of that the previous spikes in social mentions of Ripple, pretty much every spike came at it's at a turning point for the coin, right? So the previous spike in mentions came at the very bottom, which it came for a lot of coins. But then the spike before that came at the very top in February. The spike before that came at the early February's interim top. And then the spike before that came at the first stop in mid-January and so forth, so on and so forth. So pretty much every spike in social mentions of XRP has correlated with either the bottoming or local top of the Ripple's price. So this latest sort of spike in social volume might, if history is indicative at all of the Ripple's performance, we might see a slight correction.
Don't move away from here because there is one learning I know from the past, and it's very subtle. And it's a cool, finally, we have this on the chart because this relative social dominance or simply social dominance, orange line, this is a key for spotting the tops. Because the volume might increase, like previously we have only volume, right? Like green one. And it might increase, but because in general volume of stocks in crypto increasing, you always need to pay attention to social dominance. At the top, it will be divergence. Now, look into February, we had it there. Very classic sign. Yeah? So the dominance was not as high as previous one. And Ripple, it's already on the border because it's too big coin. For small one, it works amazingly. You will have very strong follow-up or attention close to the top, but very frequently the final top comes when the latecomers really jump on board. So they still talk a lot. But when you compare to what was the last top, you will see, okay, they're not getting so much attention anymore. And for this, dominance is the best. Now, if you switch back to 1 month, because I just saw it on the Ripple. Oh, 3 months. I think here we need to ask them to do a little bit aggregation. Oh no, good. You see, it's a kind of it's higher volume and higher dominance. For my eyes, it looks okay. Still, but you see, as the last top, what I was talking here, it's quite clearly. It's very big, like it's dominated. Like everyone is talking about is one before, yeah, one top before. This is where you already pay attention. If you have Ripple, say, okay, maybe I need to leave it. And if you don't like to chase the last top, you can leave it. But sometimes the last top in crypto, it's amazing. It's good to ride it. So you can take some risk or couple your position a bit, and then you will see that, okay, 10th of February, so we did make a top, but didn't get so much attraction from the crowd anymore. Yeah, it didn't get so high. So we're on decline. You will see it frequently, very frequently. Okay.
So to clarify for everyone, Maxim, if we were to see a repeat of this pattern, if we were to see from a smaller scale, the social dominance spike here, followed by another one, let's say in 2 to 3 days, but it was just slightly lower, that would indicate that we probably hit a local top and we're likely going to see a retracement, right? We're looking for a lower high of those social dominance spikes.
Yeah.
Gotcha.
But it should be like combination. Price keep pushing, but you cannot attract crowd anymore. Crowd is somewhere else. Crowd may be pumping, I don't know, already Atom token or Maker or whatever. They are not here. And this is the beauty of crypto, because the crowd is moving its attention so fast. There is so much money around. So if you don't keep them anymore, okay, the price dumps.
Yeah, I was just looking for social volume here on Ripple. Here we go. Just to see it on here as well. We had that big spike here just recently. So we'll be looking at social volume as well.
So I got a question for you guys. Just in opinion.
Okay.
Where do you think Ripple is going to be in a year from now?
Oh my God.
I know it's impossible, but I can't help but to feel that just the metrics are horrible. People are getting dumped on. I don't think the token has any value whatsoever. That's just my opinion. How do you guys feel about that? Do you think that there will be a moment where you'll see another massive pump and, you know?
So can we? Yeah, go ahead.
They will try, of course. They will try. No doubts about it, because there are too many people involved there who wants money back on the investment.
Right. It's a lot easier to make money longing than shorting. So I absolutely agree with you on that.
Yeah.
But I think just as an asset as a whole, it's not. I don't know. I don't find it's a good place to leave your money. If anything, I mean, like you said, it's likely to have a pump one day, but
yeah, and
see how long it takes for that day to come.
And Ripple's on-chain data is very wonky from time to
Really?
time. Yeah, like if you look at maybe Val here can explain if this is, or kind of shine a light on why we're seeing this. So for example, daily active addresses, right? Brian, can you select that so we can see it? And then just deselect
social volume?
Yeah, deselect social volume.
Or pop-up likes to block the X button from time to time.
Yeah, just scroll up a bit and then you'll be able to. There
we go.
Yeah, so there were these massive spikes in daily active addresses for Ripple in February, which is like, I think it's like 200x or something. So the biggest spike was 230,000 daily active addresses, basically 230,000 addresses receiving or sending Ripple on that specific day.
Money.
Yeah, moving money. And then the next day is what, Brian?
Day after 6319.
And that's like the standard sort of amount of activity on the network. So I was trying to figure out, like I was looking for any sort of news related events, anything that might explain these sort of influxes of addresses being active on the network, but I was unable to really find any sort of any sort of explanation. So I don't know, Val, as Valentin, our CTO on the call, do you have any sort of technical explanation why this was happening? Because from like a news or sort of announcement perspective, there was nothing to really propel this amount of on-chain activity all of a sudden.
That's really interesting indeed. I don't know. Sometimes such kind of activity could be related with mixing activity. So if there is a automated mixer that just juggles coins around in order to hide their origin, that could be one explanation for that. But it needs to be
centralized, no?
Yes.
It's centralized, but still you can. You can buy a lot of coins into it, juggle them around the blockchain, and then convert them to something else.
Okay.
Helps you out to hide from chain analysis in order to find you. Then I guess it makes sense.
Right. Can you, Brian, also look at the on-chain transaction volume for Ripple? I think it looks a bit more natural, but still there seem to be some Yeah. Okay. So yeah, that looks more natural, I guess. And then we can see that there's been a slight increase over the last few days, but as sort of a macro trend, it's been on a decline. But it's been on a decline since the market crash, so that's not really a good place to look for trends. Yeah, I'm not
So
sure.
You can always compare it to Bitcoin, which would be a cool way to see it as well.
So just at a very basic level, when you guys see a spike in daily addresses, not necessarily for Ripple, is that generally bearish, bullish, or there's not really a sentiment attached to it?
So I think, yeah, Max can maybe join in here after I tell what I think. But in general, if I'm seeing a spike in daily active addresses during a rally, that's usually a sign of just increased activity and interest in the coin. And in general, a lot of that increased activity is coming from speculators, right? So people kind of trying to take action and take advantage of the pump. So usually what will happen is you see the price starting and continuing to push upwards, and then the spike in daily active addresses will start to decline after a while. So there's this massive, usually one or two like massive DAA candles, and then it will sort of retrace back to its pre-pump levels. So now you have this sort of divergence happening on the charts where the price is starting to or trying to chart new highs, but the on-chain activity is no longer following. And we've actually done some sort of some back tests on this. We created a strategy around it. We call it price DAA divergence, where we track the differences in trends between the price and daily active addresses. And when the price keeps going up and the daily active addresses start going down, that's usually a sell signal for based on this strategy. And then vice versa, when the price is tanking but the amount of activity is rising, that usually triggers a buy signal within this strategy. And it's been pretty effective for both Bitcoin and Ethereum over the last few years. So I would, rather than just focusing on the spike and saying, oh, this is bullish, this is bearish, I would use that as sort of a starting point to start looking at the charts from there on out and figure out if the amount of on-chain activity continues to is able to sustain itself in the future. I would say no, that's fine. That's a good sign for the blockchain, right? But if the spike and the inflated activity is very much a solitary event, and then from there on you see a very quick retraction in the amount of network activity, then the price usually follows over the next couple of days as well. Max, do you want to add something to that?
Not much. Generally, you explained everything correctly. I was just checking chat. I don't know why, for Brave BIT, and yeah, the spike in DAA, it's a first attraction point for you as an analyst. Yeah. So you see spike, you see price change. You say, okay, good. So far, so good. What happens next? Yeah. And if there is a growing price, but no DAA, well, actually, it could be both. It could be great opportunity. Mostly, it can only happen in some really like not very known coins, because there is some activity where also what I was doing something, and or market makers moving, but crowd is not following. So DAA, daily active addresses, it represents always the crowd. Yeah, so there is really like crowd following up. And yeah, if you Brian take here 3 months, and this is a picture when we issued last time. Well, we're analyzing Ethereum, so we actually did for Ethereum, but you will see a very interesting thing. Now, at the last stop, you see it was spiking, growing. Everything was fine, but then at this very last, what is the date?
That's like February 15th, I think.
Yeah, I think, yeah.
Yeah, there you go, 12.
Yeah. No, next. Yeah, I think 15, yeah, 15. So they kind of tried to pump, but network, no one follow up, and it was across many coins. In Ethereum, it was not so clear visible, but it was clear enough to say, oh, okay. And we saw the same on trading volume, social, and say, okay, well, that looks toppish.
Yeah.
So the spike by itself initially it attracts your attention, but then you start from this moment analyzing what's happened next.
It's also like I wouldn't ever base my decision only on daily active addresses. I would do what Brian is doing right now and figure out what else is appearing on the charts. Like for example, if I see this massive spike in daily active addresses, one of the things that I would then do is I would look at our exchange metrics for the coin and figure out, all right, what are these, addresses actually doing? Is it just people sort of exchanging value between private wallets, or is a lot of these coins sort of now entering exchanges, which might indicate a rising sell pressure, right? So if I see a spike in daily active addresses and I see a correlating spike in the inflow of the said coin to exchanges, that might be more of a bearish sign than just a spike in daily active addresses, if that makes sense. Thanks.
Brian, by the way, it's when you select many indicators, it's good to have a split chart.
Right.
In statistics, then multi-chart, then you can see many of them.
But guys, we're already at an hour mark. I wanted to briefly talk about MVRV, but I don't know if we should start that, because that usually takes a while to go through. In general, Brian, can I just quickly take over and look at a few Bitcoin metrics before we end? Yeah. Okay. Allow. You can see my screen, right?
Yep, looks good.
Okay. So now we're in sand data, and I am going to look at the last 6 months for Bitcoin. So one of the interesting things that I'm noticing today is this spike in daily active addresses, the biggest spike since the market crash. So there's some sort of elevated activity currently enveloping on the Bitcoin's blockchain. And then if we see what that is doing to the transaction volume, it's actually not that much. So the actual amount of activity, or the amount of Bitcoins being transacted on the network, is way less compared to the amount of that it was during the market collapse. So this is sort of being, the transaction volume is kind of going back to its pre-pump levels, but there is a rising amount of activity in the network, which is not necessarily a bad signal. But I specifically wanted to look at the MVRV for Bitcoin, since we have Val on the call. Val, do you kind of briefly want to give us your opinion on MVRV and what it's been showing recently for Bitcoin? Actually, maybe you should have shared your screen instead. Maybe that's easier.
Well, it's not really necessary. I mean, you can select just one MVRV here, maybe 180 days or a year. Pretty much what it tells us is on average for the coins, let's say in this particular case, the coins that are active in the last 180 days, what is the average profit or loss of their holders. So it compares the price at which the coins entered the wallets with the, and when this metric is below 0, it means that on average the holders are at loss. When it's above 0, it means that they're at profit. So what we can see is that after the latest drop, on average, the holders reached a loss at 40%, so minus 40%, which is like really, really low value. That was at the bottom of the market. These usually are like the greatest time to buy. Historically, we've seen minus 40% very rarely. Yeah, if you select a large time frame, you're gonna see that it's rarely these MVRV ratios are reaching such low values. Right now we are sitting at minus 15%, I think.
Yeah.
So the rule of thumb is that the lower this ratio is, it's a better time to buy. And also extreme high values are also good times to sell. And generally, as the time goes, this ratio is starting to, like, the extremes are becoming more narrow. So, for example, if in 2017 we saw MVRV values of like above 100%, since then we haven't seen such large values. So it's very highly probable that we're never going to see such kind of values. So as this ratio approaches historical extremes, it's good time to buy or sell. So right now we are at minus 15%, which means that so generally the risk levels are good for buying. We are not as low as it used to be maybe like a week ago, but still the ratio right now seems to be leaning towards the buy side. So yeah, better time to buy than to sell. Like it's not, definitely doesn't look like a good time to sell. It looks a relatively good time to buy.
Right. And looking at the other, so this is for the 90-day MVRV ratio so the average profit or loss of the coins that have moved in the last 90 days, we can see pretty much the similar state of affairs. Looking at these short-term holders, everybody's in a fairly similar situation. So yeah, as Val mentioned, usually the way you want to really, if you want to use the MVRV ratio, you want to look at its historical values and figure out, not just look at the absolutes, but relative to its historical performance, how low is low actually. And so we've hit a pretty big low, around 40% for a lot of different holder categories in the event of the Black Thursday, and then from then on, it's been growing towards break even for a lot of different holder categories, but still it's about short-term traders, a lot of them are still around, on average, around 20% down on their initial investment. So based on the MVRV ratio, at least, Bitcoin is still undervalued for a lot of different holder categories, so to speak. Okay, I think, yeah, we're already an hour and 5 minutes in, so I'm gonna cut us off here. I think we could talk a lot more if we wanted to, but there's always next week. So I would like to thank everybody that has joined the call and that has shared their insights about the crypto market. Bagsy, I want to thank especially you for joining us today, and I hope to see you join our calls more frequently from now on.
Thank you. You got it.
And for everybody listening to this, either live or after we kind of spread it around our social channels after the fact, if you like what you heard today, if you want to try and use some of these, indicators and metrics yourself, check out santiment.net. We have a 2-week trial for Sandbase Pro and Sandata. So if you really want to kind of play around with it and actually test the power of these metrics for free, you can do so. And also join our Discord, because we talk about this stuff every day on our trading channels. Bitcoin, Ethereum, altcoins, whatever floats your boat. So until next week, I want to thank everybody joining us and everybody listening, and I'll talk to you all in 7 days.
Thank you.
Thanks, everyone.
Thank you, guys.
Yeah, thank you. Bye-bye.
And stream.